One chaps, hope you're ready for another beautiful day of trading. Does our background picture here have any clues for what's going to happen today? Let's find out. I do have quite a lot to discuss today. Thank you very, very much for your feedback. As always, one of the things that I'm going to try to do is have shorter videos, so let's jump straight in. Right. On our TradFi markets, as I said yesterday, essentially what we do have is a waiting game. As you know, today we have an Apple release that might have some kind of an effect on our SPX chart in front of us. As you can see, yesterday we have very, very lethargic price action. And with our Dixie, this is very interesting. Like I said to you, we do have this crazy 7 week long rally that shot straight up. It's only natural to have this small little pullback. And as you can see, we have continuation over here. So essentially, um, we are still pretty much headed straight up for the top of the range, as I have discussed. And essentially, this week is going to have a huge news impact events. Tomorrow we have some CPI data coming out. So hold on and let's just continue with these trends. Like I said, let's have a look to see what we see. I'm not going to jump any further into these TradFi markets. We've done quite a bit of coverage on them in the last few days. So let's just move straight back into crypto. We had some very, very interesting price action yesterday, but let's always, as always, just zoom out, have a look at the major over, these high time frame views of what's going on. And very interestingly, yesterday, I actually forgot to add in some fractals that I wanted to show you. And I was reminded of what I wanted to show you yesterday by some interesting tweets. Thank you to Trader K, who has reminded me of these. I will actually give you some props later on. Let's just have a quick look here. As we know, this is the zone and the area that we've been trading in for quite some time. What I wanted to see and try to predict with some fractals, which are always very, very good in terms of history rhymes. It doesn't necessarily repeat, but it certainly rhymes. I picked up two fractals that I want to show you now. First fractal I found was taken from this area over here. So why I picked that up is because it looked very similar in this area of the chart. We saw some pretty similar price action. And what I'm going to do is just zoom out so that you can see a little bit more clearly what I saw. The price action had this very, very similar sort of action over here. And then unfortunately, we have, like I say, price history repeats. It doesn't exactly, sorry, history rhymes, doesn't necessarily repeat. So fine, we had this big squeeze up here. Price then continued to have some similar looking action, and it then obviously has this horrible spike down. So that's just something to bear in mind. The horrible spike is something that we can take advantage of, and something that I have been trying to track for quite some time, as you know. I then picked up something really interesting in terms of this fractal. If you remember what this looked like, it is taken exactly from our first peak up to around 64,000, our drop, and then our all-time high at 69,000. As you can see, there's some fairly similar price action here and here. And basically, what does this say to us? It says that, this is why I like this fractal, it says that we are coming back down to this zone here that I have marked for one of what I think might be our ultimate second or higher low before we dash right back up again on this crazy bull run. As you can see, there's confidence in this zone over here. That's why I like this. I also liked it in terms of its shape and its timing, but I am going to show you something here that's going to blow your mind. It blew mine yesterday when I saw this fractal. I was very, very interested to see exactly how perfectly it lined up. It's taken from this area of the chart right here. If we take that fractal and we overlay it on current price action, we get the following. Very, very accurate and quite scary in terms of how perfect it tracks this price over here, all the way down, perfect drop, perfect spike back up. Look at the respect it has in terms of price levels, comes back down again, perfect drop over here, range. Now, this is the area of the chart which once again shows us that if history repeats, well, again, I always get this the wrong way around. If history rhymes, we are primed for quite a drop still to come before we have this beautiful rise. Now, there are a couple of things that we can learn from this. Firstly, that, let me just get rid of this over here. Firstly, that essentially this does back up what I have been saying for quite some time. We have a very, very bearish stance on the market. We certainly do not have any strength at this point in time. As we know, what transpired yesterday was another flush down to the downside. So as far as my theory holds, and as far as the market is actually showing us, this area here, this area over here, is something that isn't looking very strong at this point in time. And as we know, market makers do tend to play with the retail traders. And I'll show you something later on the perp and spot CBD, as we always have a look at. And you can definitely see that there's still no major interest in this market. There is more fear than I've seen for quite some time on the fear and greed index. We're down to 30. We haven't seen such a low in quite some time. So as soon as we start really, really getting down to those extreme fear moments, that's the point of maximum financial opportunity that I'm waiting for. I still don't think we've seen major capitulation yet. And as soon as we lose our range that I've been speaking about for quite some time, we should then start to see some kind of reaction in these lower parts once we start getting back into this area of the chart and this range. So if we really zoom out, essentially what we're going to be doing is building our lower highs, sorry, our higher lows. Here we go. Here's our low, first low, higher low, and that would also be a higher low over there. So over time, essentially, we are we remain in this the very, very long term bullish market structure. You know, we haven't created any lower lows. If we lose this low over here, then we can start reevaluating. But as far as this thesis holds, we're on track for another face melter of a bull market. And this has literally just been a bear market rally, and we are seeing some continuation in that trend. So all in all, this does look quite scary, but have a look at what it spells for the future. Like I say, this doesn't necessarily mean that this is going to track perfectly, but it does give us some kind of indication of where we could look for some price action to follow. As we know, it has been extremely accurate so far. I do think that it might change character after a while. I don't expect this to continue to follow exactly, but for now it has been very, very good. Let's see. Let's continue with this. Thank you very, very much at Trader K on Twitter for your input here. That was really something that blew my mind. Right. What I wanted to show you here was as follows. What I want to start doing here is just highlighting the fact that this spot CBD is mainly retail and overall market sentiment. And as you can see, we are making these lower lows as we go. So after yesterday's flush, we have seen an increase here once again in the perpetual markets, but that is really a whale's playground, and I'll show you later how this all transpired and exactly what they're doing. So market sentiment, as soon as we start tracking the spot CBD having higher lows and higher highs, that's going to signal the bull market is really on. But essentially, we are just seeing continued weakness, which is exactly why I do still think we are going further down. I am going to show you what happened over in this section of the chart. As you can see, however, this is just a 50,000 foot overview of exactly what's happening. And we continue to get these major market moves in the perpetual contract markets, which is what is moving things right now. So let's now go and have a look at what seems to be a little bit of a busy chart, and I'll show you exactly what's going on here. This is the area that we have been tracking. So don't forget our channel. This is the channel. We have had a few divergences from the channel. This was yesterday's divergence, but we're still tracking back into the channel. So essentially, it's business as usual. If you are sharp, I was saying that there's such boredom going on, and I said in my video yesterday that people have been saying, oh, it's so boring. Have a look at this price action, but you got this beautiful move, like I said. Beautiful move back down again. That's a couple of percent in a day. This was just a gift. Such a gift. Absolutely unbelievable. So let's have a look at exactly what's going on our chart. We have an updated set of liquidity pools that are going to be targeted at some stage. So this I marked up in the charts this morning. Let's just zoom in a little bit so that we can see exactly what's going on. As you can see, we are right back again in our fixed range. So what does this mean for us? Business as usual. So we've got our scalps that we can have a look at. We can continue having a look at our day trades and swing trades. If you're still not in any, I will have to guide you through here to see exactly how you can get in and what to do. So liquidity pools, why do we see this liquidity pool over here? Essentially, this liquidity pool has built up because we have stops that are being placed just above this wick over here. Liquidity pool here has grown in terms of its quantitative and qualitative characteristics. And what do I mean by that? Over time, this liquidity pool has actually swelled in terms of its volume. Also, it's slightly bigger than it was yesterday. So just bear in mind that what are market makers looking to do? They're looking to grab liquidity so that they can push price around and get the maximum profit out of it. So what did we do yesterday? We grabbed all of the liquidity in this zone. So what are market makers going to most likely do? They're going to target this liquidity over here, and as my theories go, probably a little bit higher. And I'll show you exactly why.
So what you can start doing in terms of your day trading strategy is to start looking for entries, scalp entries around here, around this zone, day trading entries around this zone over here, and I'll show you some further swing trading opportunities further up around these areas over here. All right. Let us zoom out a little bit so that I can just give you a little bit more of a picture of exactly what's going on. Okay. Bear this whole picture in mind. I'm going to come back to this and draw out a few little scenarios. What I'm going to do, however, is just try to give you an explanation of what happened yesterday and why. So what you need to always bear in mind is that market makers are in this game of grabbing liquidity to fill their bags. Their bags are a lot bigger than ours, and they actually require a lot of us retail traders to be trapped. So what do? They induce you to take trades. Here you can see this is the weekend. This zone over here is the weekend, and you can see it's rather flat. This on the bottom here, what I'm showing you is the open interest. Open interest is where traders have committed to trades. They are in trades. What now happens is in these very, very low commitment zones. By low commitment, what I'm saying is that there isn't much movement. People aren't committing to trades. So essentially what's happening here is what market makers try to do is they try to get commitment from traders by pushing price around and getting traders to jump in, usually by FOMO, or you get these breakout traders that chase a move. Either which way, it doesn't end out very good. And I will show you here once I get rid of that on the chart. What happened in this very, very low commitment zone over here? What did the market makers do? They pushed price down in this area of the chart. They grabbed liquidity, pushed it back up again, and continued with their move. This was just a precursor of what was to come, right? As I showed you, that was a really, really nice trade. That was just under 2%. But as you can see, what happened was at that point in time, they grabbed a little bit of liquidity, which means that open interest invariably did go down. But look at what started happening here. This trend of open interest increased. What market makers did was set two traps. This over here was just baiting their overall trap. It's actually very, very clever what they did. They got a false move going up to this point over here, where they actually started filling their bags for the overall bigger move. And what you can see here is they started getting further interest building in the market. They then started the push down. So what happened is they actually got retail traders to commit long over here. They then took liquidity and they then started baiting the move to go down. How did that pan out? Well, you can see there's this acceleration here of open interest and people starting to commit short. What then started happening is the squeeze down to this zone over here, and I'll show you exactly what that zone is and why there was a reaction. Well, the rest is history. So as you can see here, there was a whole lot of people piling in on the short side, which unfortunately for a lot of retail traders didn't end up well, as you know, because they literally got squeezed right back up to exactly where we started. So what happened here, I just wanted to show you that you can also try to figure out the next move. Pretty simple. Here on this scale here, you can see this is the longs. On the longs, there was really not that much increase. It was quite choppy in this zone over here. What you can see is, let's just quickly work this out together. This is well, actually, you can see here on the scale, 3.6 million down to negative 4.7 million. So that's around about 8 million moves. So from the top to the bottom here is around 8 million, right? Delta. Here, we've got a huge amount. So we've actually got, on the top of the scale is 0. That's a lot easier to read. It isn't hidden by this. So we can see here 0 and 30. So actually, we've got a move of around 30 million delta shorts, and we've got only about 8 million delta longs over here. So essentially what happened here is very little commitment over here on this side, huge commitment here on this side. What did market makers do once they got this essentially 30 million delta in shorts over here? Once they had filled their bags to the long side, they grabbed liquidity once more. Another swing failure pattern below these lows where everybody was piling in. Excuse me, I didn't turn off my phone. What I was saying is that that broke my concentration. So what did we have here? We have our initial move to the downside, right? You have a whole lot of people committing short, as you can see over here. What do market makers want to do once they have moved the price down? They started this move over here. First, they got people to commit long. They filled their short bags, pushed price down, got their profits. Once people started piling in short, late shorts, as you can see by this over here, they wanted then obviously to take that liquidity and move it back to the upside. So that's exactly what they did. Once they had this commitment over here, they took one last bite at the pie, some further swing failure pattern. Then they pushed the price all the way back up to the upside. Here is where that short squeeze happened, as you can see on this major drop in open interest. And here's the open interest, and you can see the short volume just plummeted. And essentially what's going to happen here is the same thing over and over again. If you start to understand this, you are going to profit if you can just move with the whales. So essentially what we're seeing here is the building of yet another trap. Okay. So what I wanted to show you is where did we get that initial reaction? It was quite beautiful on this daily naked point of control. Quite amazing. Swing failure pattern, daily naked point of control hit beautifully, and technical analysis is working once again. So I also wanted to show you something that I use. As you know, I use these VWAP bands. I use VWAP bands to show me where reversals are likely. So obviously nothing is 100% in trading, but perfect reversals, as you can see. This is such a powerful tool that I found and used. It just shows you these reversal zones. I'll get stuck into the theory of this later, but yet again yesterday, here's a perfect example of where we expected, just on VWAP band theory, that this reversal took place, and of course it did. This is not yet a reversal zone. I will get into the theory of VWAP bands later. It does show you obviously that it has hit some sort of resistance in terms of VWAP bands, but I do expect a further push up, and I'll show you how and why. Let's get rid of all of this. I just wanted to really show you this zone right here. Okay, let's clean up this chart a little. So now that I've shown you exactly what happened yesterday and how that whole move took place and why it took place, it's market makers. It's this perpetual market over here that's pushing price around. That is exactly what's happening. The spot market really just shows you sentiment. Okay. The big moves happen based on the fact that this is a non-regulated environment, and we've got low liquidity at the moment. Whales will be whales. They want more and more. It's just basically greed, and the unfortunate thing is that retail traders just don't learn. They get pushed around by their emotions, either extreme fear or extreme greed, and they fall into exactly the same traps. So while this market is not regulated, I expect that the smart traders are going to be making a lot of money by following the whales until such time as more liquidity enters this market and we get these very, very low, slow moves, just like the TradFi market. So right now, make hay while the sun shines, as they say. So let us get back to our chart over here. What can we now expect? Like I was saying, the liquidity on the bottom side has been taken. What does that mean for us? I expect that we are now going to be pushing to the upside based on the law of probabilities and what market makers are going to want to do. So let's start making a plan. What you see here are a couple of indicators. We've got the 100-day and the 200-day moving average, and you've got this anchored VWAP. And I'll show you exactly where this comes from, just so that you're in the picture. The anchored VWAP comes all the way back in time from the 30 odd K, the 31.5K top. As you can see, it's been very, very well respected to show us where we might find some kind of a reaction. So let's draw out a possibility here. As you can see, this has also been a very, very good zone of reaction around here, around the 100-day moving average. This 382, otherwise known as a dead cat bounce, if you get a reaction of the 382 fib level, it's known as a dead cat bounce for obvious reasons. And this is a macro 382, and it's exactly what happened. We got a bounce into this zone, which is a weak bounce. So as we know, markets are weak. It is trending lower. We are getting lower and lower highs. So if we can start building this picture of lower and lower highs, resistance off of these indicators here, I expect this to roll over like this. I expect this to continue down like this, and I expect this VWAP to continue down like this, all converging at some point in the future. That gives us a lower high, right? As you can see, all of this converges around here somewhere in the future. Will it take that long for our expected move up and the grab of this liquidity here? And there are liquidity pools that I haven't drawn out just to keep charts a little less busy. But the point that I expect is that we tend to make a lower high. Let's clean this up a little bit. That we are heading up. We're going to make a lower high than that, and all of these indicators are converging down here somewhere into the future, we have the picture building that we are going to go up, perhaps have another deviation on the top side of this channel, and then continue further down. All right, as I have discussed in these charts over here. So medium term, I expect a rise and then a further dump. Can things change? Of course, things can change. This is a law of probabilities, not absolute. This is exactly what's going to happen. So this week, as we know, is going to be very, very jam-packed in terms of all of the news that's coming out. What we can do is just give ourselves a little bit more of an impactful assessment of what's going to go on around those news events. Basically, those news events will drive the price to the areas that we are expecting. So let's continue to track that together. Right. As I'm going to complete our daily update today, what I wanted to give you is just a little bit of an update on this possible trade playing out. We have this very, very nice price action. Why I say very nice is that we don't have these horrible spikes down to invalidate our trade idea. We've got this nice, slow, grindy price action into our zone of interest. What I do want to let you know is that this risk to reward ratio tool that I've used, this long tool that I've used and I've mapped out here, this isn't exact. Please don't go and jump into a trade based off of what I've put here. What we want to do before we jump into a trade is, as this gets into our zone of interest, we're going to want to jump down into a lower time frame and have a look at the order flow and actually see, do we have an entry trigger? Don't just base what I've put here as absolute. Set your limits over here, set your hard stop over here, and expect the trade to work out. What we're going to do is we're going to track this trade, we're going to have a look at it, we're going to zone down into what price action is doing in and around this area, and then we are going to make a trade decision. Also, we're not just going to wait for our TP area over here and expect this trade to be absolutely perfect. We are going to be taking profits along the way. If we do jump into the trade, we're going to have a look at areas of interest. Where has price reacted in the past? Where are decent TP areas? And we'll track that together. So I just wanted to make that quite clear. So I wanted to also just make sure that I don't ramble, I don't go on too long. I want to keep these daily updates short and sweet. Please do keep on giving me feedback every single day. I try to implement what you say. And again, have fun, and may the odds ever be in your favor.